FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we get into the next video of the EMA series, guys, if you are enjoying the series or if you're enjoying these types of videos, please make sure to give the video a like, subscribe to the channel, and share the content so other people will be able to learn the same things that you are learning. I appreciate you guys doing that. It helps the channel a lot. So as we finish up with the EMA series, we're going to go ahead and we're going to break down the last two EMAs that we use on our charts when we talk about the exponential moving averages. And those are going to be the 200 and the 800 EMAs. Now, as I always say, everything has to have a purpose on your chart. So every EMA that we use has a purpose. That's why it's there to begin with. So let's go ahead and get into this. Let's talk about the 200 and the 800 exponential moving averages. So the first thing that we need to understand is that the 200 EMA is like home base. Anytime that price action moves really far away from home base, it always tends to come back to it. Okay, so don't believe me, go look at the charts and tell me, just put on a 200 EMA on a chart and look at every time that it gets too far away or separate. When price action gets separated from the 200 EMA, it always tends to go back home to the 200 EMA. All right, so that's the first thing. So 200 is home base. Second thing is that the 200 EMA gives us the 1 hour trend on a 50 EMA chart on the 1 hour. So essentially, when you're looking at a 15-minute chart, the 200 EMA on a 15-minute chart represents the 50 EMA on a 1 hour chart. So essentially, you can see what's happening on a higher time frame, price action wise, without needing to go to the 1 hour chart, just by looking at the 200 EMA. The 800 EMA gives us the 4 hour chart trend. So basically, on a 15-minute chart, the 800 EMA will represent the 4 hour 50 EMA. So it'll give you that trend as well. So you get basically the trend, the 50 EMA of a 1 hour and a 4 hour, but on a 15-minute time frame, so you don't have to go to different time frames to know where price action is or what's happening. What's the intraday, trend on a higher time frame? All right, so those are the main things why I like to use the 200 and the 800 EMA. It gives you all of these things just literally from the 15-minute time frame. I also use the 200 and the 800 EMA as trade confirmations for price action that's pinning to the EMAs. So you might get a setup, let's say a type 1 setup, where you're looking for sells, and the type 1 setups, the M formation essentially pins to either the 200 EMA or the 800 EMA and reverses back down. So essentially the 200 and the 800 EMA also act as a form of support and resistance. And finally, I love taking profits on the 200 and 800 EMA. Now you can use these two EMAs to take profits when they are in your favor. And meaning when I say in your favor, when you're able to use them as take profit points. And I'm going to show you all that in a chart so you can better understand what I'm talking about. But understand that the 200 and the 800 EMA, because they act as support and resistance, they allow us to use those two particular EMAs as very good and obvious areas for taking profits. Okay, so now let's go ahead and let's switch over to the charts and let me show you all the examples that you need to see. All right. All right, so here's the first example. This is Euro USD, and this is a very unique example because you're going to see why it's unique, or you should be able to see why it's unique already. But let me show you. We're coming off a peak formation high, right? This is peak formation high up here on the 1 hour chart. So we're looking for sells, okay? But we know that on the US session, we can actually take reversals. So in this particular case, we have a reversal. The reversal is essentially right here where we have the first leg and then the second leg right at the beginning of the US session, and then boom, goes right back up, right? So that's a typical reversal pattern that happens in the US. In this case, it was first leg in the London session, second leg is in the US session. Now that you see the pattern, all right, second leg is doing what? Look at the second leg. The second leg is doing what? It's pinning to the 800 EMA. This purple line here is the 800 EMA. Okay? Now, not only is it pinning to the 800 EMA, the second leg also gives us a railroad track pattern, which basically that's your entry right there. Now, the cool thing is, guess what we can use as take profits? This white line here coming across is the 200 EMA. So we can go ahead and actually use the 200 because it's in our favor. So meaning that because we're doing a reversal, this EMA is above us, we can use it as take profits. Okay. So that's what I'm talking about when I say in your favor. Okay. So not only on this particular trade setup could we use the 800 to help confirmation of the trade setup, but also we use the 200 as a take profit point to get us out of the trade, because as you can see, price action literally went right up to the 200 and started to move sideways because, again, the EMAs act as a form of support and resistance. Okay, so they tend to suppress price when they get up to them. All right, so this is one really good example of how you can use the EMAs, the 200 and the 800, for both confirmation and also take profits. Let's take a look at another one. So here we have another example of using the EMAs as take profit points. So here we have a New York reversal. In this particular case, we're actually coming off of peak formation low, so we're looking for buys anyways, but here's the pattern itself. So we have the same thing. First leg here comes up and then gives us a second leg, and then there's your trade setup. Now, I want you guys to notice second leg gives us a railroad track, but obviously this railroad track is pretty big. So the pullback candle is the candle that we actually use for entry on this particular trade setup. So anywhere in this red candle can be your entry. All right, so now because of that pullback candle, it makes this trade a viable trade for us, because if we just go up and use the EMAs that are in our favor, which is in this case the 200 and both the 50, you can see that we can get a 2-to-1, well over a 2-to-1 risk to reward ratio on this particular trade. Okay, So here's another good example of using the 200, and in this case even the 50 EMA as a take profit point for this specific trade that's going in your favor anyways. The 800, by the way, is all the way down here at the very bottom. The 800 is all the way down here at the very bottom. So we know based off of this 800 as well that the 4-hour 50, right, is still below price action. So again, all the bigger trend essentially still to look for buys, not only from just the EMA standpoint, but also from the fact that we're coming off of peak formation low anyways. So we're still looking for buys no matter what. So this example here would be a good example for using the EMAs as a trade confirmation, because here we have a type 3 trade set up where price comes up to the top of the Asian range, right? And then comes right back down to the middle of the range. Now, most importantly, what's at the middle of the range there? This yellow line here, this orange line right here, is the middle of the range. What's there? You have the 200, the 800, the 50 all right there. And what are they going to do? They're going to act as a form, in this case, of support to prevent price from going lower. So that right there is a good trade confirmation that you can use. And then, of course, you could see what ends up happening afterwards. Okay, so this would be a great example of using the EMAs, particularly the 200, 800 as trade confirmations, because price essentially is pinning to those EMAs. Okay, so now we are on pound USD, and take a look at this one. So on this particular trade setup, we're looking at a type 3. Price comes down from the bottom to the middle of the range and then comes back down again. That's a type 3 pattern. So now what are we looking at for EMAs? Here's another example where the pattern here for a trade setup is a star pattern, right? But what is it doing? It's pinning to the 200 EMA and then also the 50 as well. But now look where this goes down to. It goes down to where? The 800 EMA. So you're using, again, in this scenario, the 200 to help confirm the trade, while you're using the 800 to know where to take profits. And this is essentially well over 2-to-1, by the way. So even if you weren't going, even if you were just going for a 2-to-1, it'd be a trade setup like this. But you know, with the 800 being down here, there's a strong likelihood that price is going to want to reach down into that area of the 800 EMA. Okay, so another great example of using the 200 and the 800 for both trade confirmation and also for take profit points. Here's another example of using the 200 EMA as a trade confirmation. So here we have a type 1 pattern here where the first leg is here, second leg comes down and then goes right back up again. Now we have the pattern, we have a second leg pattern. This is the first leg here, this is the second leg. Second leg gives us a railroad track. Where does the railroad track pin to? It pins to the 200 EMA. That's your trade confirmation right there. Okay, so you have the pattern within the box. You have 5 candles between the first and second leg. You have the second leg pattern, this being the railroad track. But then you get this pullback on this red candle. The pullback on the red candle is what allows you to get into this trade setup for it to make sense. Because if you're going for a 2-to-1 risk to reward ratio, it would have to look something like this. Okay, in this case, you're only risking 16 pips. But you can see how price action reacts when it gets to the 200 EMA. It acts as a form of support in this case, and so it helps bring price back up again. Now, while we're looking at this as well, is I want you to notice something. The 200 EMA is right here, and the 800 EMA is right here. Okay, the white line and the purple line. So by looking at this particular chart at this particular time, what can you get out of the higher time frame trend? So if you look at the 15-minute chart and you're looking at this 200 EMA, you see how price keeps bouncing off of this 200 EMA. So at this particular time, what this is telling you is that on the 1 hour time frame, price is also bouncing off the 50 EMA. Now, also on the 4 hour time frame, you can tell that price is nowhere near the 50 EMA on a 4 hour time frame, because look how much separation we have between these two EMAs on a 15-minute chart. So this becomes a way where you can see what's happening on the 1 hour and the 4 hour time frame intraday, meaning off the 50, because remember the 50 we use for intraday trend, right? So by looking at this on a 15-minute chart, and you can look at the 200 and the 800, as long as both of these are below price, in this example, you know that the intraday trend, even on the higher time frame of a 1 hour, 4 hour, is still, still up. Is still to look at more buys. This up here, this square, by the way, ends up being a peak formation high. So this ends up being a peak formation high after all of this, ends up playing out or whatnots. We don't know this, of course, that this is going to end up being a peak formation high until, we get past all of this. That's a different video for a different series that we're going to have. But I just want you guys to understand the purpose of the 200 and the 800 EMA in terms of looking at it from a trend, from an intraday trend. Okay, so the intraday trend is hugely important because that's what you can use to help you find the actual directional bias, besides obviously looking at, peak formation highs to peak formation lows. Okay, so if you're looking at this, look at how the entire time for the majority of this trend that the 200 and the 800 both stayed below price action, right? So all that's telling you is that on the 1 hour and on the 4 hour time frame, the intraday trend of the 50 EMA on the 1 hour and the 4 hour time frame is still below price action. So the directional bias is still looking to go much higher. Okay, so hopefully, guys, this video has shown you how you can use the 200 and the 800 EMAs together and what the purpose of those EMAs were. Okay, so you can better use them to help with directional bias, with also intraday trend. All right, so I hope you guys enjoyed this video. If you guys like this video, please give me a thumbs up. Please like the video, share the content, and subscribe to the channel. And until next time, always trade strong and trade consistent. Guys, if you need any more help, join us on FXN Plus. It's available right now on fxntrading.com. You'll get a lot of different value from FXN Plus. For example, blueprint videos, 9 sessions, 14 hours long, over 100 hours right now of group session videos from the past 2 years. Over 100 hours we're up to right now on these sessions. You also get weekly sessions every Sunday. Ask as many questions as you want. I actually give a weekly analysis during those sessions, and I also give a midweek analysis that I put up on the website for everyone to see as well. You get access to the MT4 and MT5 indicators that everyone asked for. That's how you get access to them. Private group trading plan, custom trading journal. I mean, everything you could possibly want is on FXN Plus. Guys, join us there. If you need any more help, we'll be more than happy to help you. We'll see you on FXN Plus.